These presentations will work a comprehensive bookkeeping problem both within Excel as well as within QuickBooks. Excel having the advantages of being able to see all the components and how all those components fit together to make the end product, the financial statements. QuickBooks having the advantage of being able to use forms, simple data input, and an automated system in order to convert that simple data input into the end product, the financial statements. We will work each component of the problem in Excel first and then work that same information in QuickBooks. Hello, in this presentation we will enter the transaction related to receive payment into our bookkeeping Excel problem, keeping in mind how the same input can be put into software such as QuickBooks. We will start off with looking at how the information could be put into QuickBooks briefly, and then we will go through the process of recording the same information in. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. Our Excel worksheet. What we are saying here is we have a receipt of payment from a customer, and we're going to imagine then that we have already issued the invoice in our process. This is the home page of QuickBooks, and now we're going to receive payment in the mail. In other words, we're imagining that we shipped out the guitar in our case, and we sent an invoice with it, and now we're getting payment on that invoice. When we look at that data input screen, it would look something like this. And once again, all we need to do is just enter the data, and accounting software will typically make this process very easy. Meaning, if, for example, we received a check in the mail from Anderson Guitars here, and that being the customer, we would just have to fill out Anderson Guitar, and then the system would say, hey, we have an invoice that happens to be for $5,000. Is this payment related to that invoice? And we would just say, yes, it is in this case, by checking that off, and then put the date of the invoice and any more information, including the check number. And that's all we really need to do in order for the accounting system then to process this. When it does process it, then we'll see what happens is that the customer payment typically through the software will just mean that we are decreasing the accounts receivable. We're getting payment for something that happened in the past, and then the other side of the transaction typically in this software will go to an account called undeposited funds. And that may be new to people that were looking in accounting theory. We don't usually talk about debiting or crediting an undeposited funds account. And we'll talk a little bit on why we do that as we process this through our software in terms of Excel. We'll put the same information into Excel and work through this journal entry. Moving over to the Excel worksheet, we're going to enter this same information, receiving a payment from a customer. Typically, it would be worded in a textbook something like received payment on account or something like that, indicating that we are getting cash. And the reason for the receipt of that cash is not that we got the revenue at this point in time, but we are paying down the accounts receivable. So we're reducing the accounts receivable, and we're going to record the cash receipt. The new thing that we're going to do, and we're going to mimic what would happen in the accounting software, is that we're not going to just debit cash as we normally would if we received payment on account for a normal transaction. We're going to put this other added account in place, that being undeposited funds. In essence, this is still a cash account, but what it's going to do is just hold on to those checks or those payments that we have not yet put into the checking account. So the checking account here is more detailed than just cash. It means that this is our checking account, what's actually in the checking account. And this is going to be another cash account that will be the stuff that we're holding on to, that we plan on putting into the checking account. Why would we need this? We want to be able to reconcile the bank accounts, and that's going to be the main thing. So at the end of each day, theoretically, we would collect all the receipts for that day and then go to the bank at the end of the day and deposit them. We're going to deposit them all with one deposit, even if we have multiple checks. And therefore, when we look at the bank statement, it will be deposited in terms of groupings of checks. And we want to be able to group our information in QuickBooks the same way, so that when we do the bank reconciliations, we will be able to group them out and check off the transactions as easily as possible. Therefore, we are going to do this process. We're going to put it into undeposited funds, and then when we go to the bank and deposit them, we will move them from undeposited funds to the checking account in accordance with the grouping that we have deposited in. So we're going to scroll down here. We're going to put a new transaction. It's going to be on January 1st. January 12th, I should say. January 12th in F19, and then we're going to scroll back up and we're going to say, is cash affected? It is, but it's really going into this undeposited fund rather than the checking account. Like a cash account, though, we're going to do the same thing to it. We're going to increase it. It's a debit balance account. We will increase it by doing the same thing to it, another debit. Right-clicking and copy. We will put that on top in cell G19, right-click and paste 1, 2, 3. The amount then is going to be for the 5,000. So we'll enter the 5,000 in the debit section. Then we're going to have a credit for something of 5,000. And the reason we got this money, we got a check in the mail, is not because we earned it at this point in time, but because we earned it at some prior point in time and now are receiving payment for it. That's the account of accounts receivable. So here's the receivable representing people owing us money. It's now going to go down. We do the opposite thing to something when we want it to go down. This being a debit, the opposite then is that credit. So we're going to copy the accounts receivable account. Scroll down, we're going to put that in cell G20, right click and paste 1, 2, 3. We're then going to go to the Home tab, Alignment Group, and Indent. And there is our journal entry. We're going to go ahead and post this now. Here's the undeposited fund in the journal entry. Here's the undeposited fund in the trial balance. We're going to find that same undeposited fund in the general ledger, which will be in the same order. Scrolling over. Well, let's do one more thing. We're going to do one more. I'm going to scrolling back over, and we'll freeze the panes to make this process a bit easier by clicking on cell AJ1. Then going up top and going to the View tab, we want to go to the Windows group and freeze panes. We're then going to just freeze the panes at the top, and hopefully that will make this process a bit more simplified. Back down to recording this journal entry. We're going to record that journal entry. We are looking for undeposited funds, which is an asset account. There it is. It's in cell AU22, that's where we want to record this information in AU22. We will select equals and then point to that 5,000 in H19 and select enter. It then increases to that 5,000. If we scroll back to the trial balance, we then see the 5,000 undeposited funds here. We're then going to record the receivable side. So here's the accounts receivable that we want to record. It's the second account on the trial balance and therefore will be the second account on the general ledger as well. So it's right there. We're going to scroll down just a bit. We're in AR11, cell AR11. We will say equals and then point to the I-20 and enter. So that amount has gone down from 21,330 down by 5,000 because we did the opposite thing to it, a credit to 16,330. That same 16,330 would then be found over here in in accounts receivable. Now we've also done something to the receivable, and remember that means that people owe us money. And we also track that over here in the general ledger, as we do with all accounts, by when the transactions happened. But we also want to know who owes us that money. This will be done within this system by going through the subsidiary ledger. This is something that could be automated by an accounting system if we are able to put in the customers. When we are doing a system in Excel or by hand, we need to put this information into the subsidiary ledger to know who owes us money. We are going to the right here. I'm just clicking over to the right, all the way to the right till we get to the subsidiary ledger. So here is our subsidiary ledger. The person who paid us is Anderson. So we're going to be right here. And really, I'm just going to record this same credit to the receivables right there. So we're going to say this equals that credit. And that's going to bring this balance down from 5,431 down by 5,000 to 431. So there's the 431 owed by Anderson. If we were to add up all receivables from all customers who currently owe us money, we get 16,330, and that should be the amount on the general ledger. Let's double check that. I'm scrolling back over to the general ledger, scrolling all the way back over to the green accounts on the general ledger, and there we see 16,330. Same data, just a different order. Rather than just being by date, now in order by first the customer, then by date. Then we see the same amount, 16,330, in the accounts receivable account for the trial balance as well. We can then see that this trial balance is being created from the general ledger and can be used then to create the financial statements, something that can be done in essence in an automated type process when we create the financial statement. So I'm going to scroll back over here all the way over to the financials. And here are the financial statements. Now note the undeposited funds are broken out here. Probably should be included in the cash account rather than a separate account for undeposited funds. But just to show that second account, it's right there. At the end of the day, we're going to include that in cash because the undeposited funds will go away as we deposit them at the end of the day. And in any case, these are the amounts there. And we can automate this whole process, and we can see how this automated process works. As we go, we will create the financial statements at a later point. We can see that we are in balance here in terms of the balance sheet, and the income statement, no impact from this transaction. We had revenue of 790 from prior transactions, cost of goods sold 632, giving us the net gross profit, which is also net income because we have no other expenses, and the statement of owner's equity remains much the same as well. We got the beginning balance, the deposit from the owners, the revenue here, net income I should say, that's the net increase, and here's our ending balance, which matches the ending balance here. This is all just being generated from the trial balance, and is something that once the trial balance is made, once the trial balance is in balance, we can just automatically create this stuff. But we do need to be able to know what the trial balance is doing, so that if there's a problem, we can go back and take a look at what that problem is. Hello, in this presentation we will record the transaction in our bookkeeping Excel problem for the receipt of payment from a customer, comparing and contrasting to a process that may be done in some accounting software like QuickBooks. This is the second time we're going to work through the receipt payment. We're going to go a little bit faster, so for more description, you can take a look at the prior presentation on the receipt of the payments. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. We're going to have this information first looking at what could be done in accounting software such as QuickBooks, then move to Excel, recording the transaction into the Excel process, providing more detail. If we were in something like QuickBooks, then we would be saying we're going to receive payment from the customer. And that typically means that we have already issued an invoice. In this case, we issued an invoice probably for a guitar at this time, and now are receiving payment for that, meaning we're getting a check in the mail possibly, or some type of payment form. And we're going to look at the transaction related to this. In QuickBooks, we would just click on that item, and all we would have to do then is select the receivable who we're getting the item from. And then it will say, hey, these people owe us an invoice. Is this related to one of these invoices that you have priorly input? And we would select the one that it is related to, and that would populate the amount, or we can populate them out separately. And then we would put the date here of the receipt payment, the form of receipt, and in this case we chose the Visa here, and that would then match this out. So the fact that we have the customer payment means accounts receivable typically is going down. The amount that customers owes us goes down, and the other side will be, you would think, cash, but in this case it's going to go to that undeposited funds, that holding account, that account used for holding until we actually make the deposit in a grouped deposit. This is the type of transaction we may not fully see when we enter the data here. This is the transaction needed in order to create the financial statements. This is the transaction we'll see in more detail as we record it in our Excel workbook. Here is our Excel workbook. We're going to record this transaction related to the receipt of payment, and oftentimes if this was in a textbook we would say something like we received payment on account, and that means that we got money, so we got cash typically. But note, we don't have just an account called cash here, we got checking account, and it didn't go in the checking account yet. It went into we're just holding on to it. We're going to put it in the checking account at the end of the day, and right now it's just an undeposited fund. So we're going to have this added account added to what normally we think of just thinking of theory, because we're breaking out this cash account to separate accounts, in this case the checking account and the undeposited funds. The point of that meaning is that we are then going to go and deposit those funds into a group, and when we do so we will have it grouped together, and that'll help us to track the cash and help us to reconcile the bank accounts. So what we're going to do is going to increase the undeposited funds. It's a cash account. It has a debit balance. We're going to increase it by doing the same thing to it, which in this case is another debit. So I'm going to copy that. We're going to scroll on down. We're going to go to 112. We're in the same date here. It's going to be the same transaction as we did up top, except the amounts will be different. So we're going to select paste special, or paste 1, 2, 3. It's going to be 7,500, and it will differ when we record this to the subsidiary ledger. So remember that as we record it here, we'll also need to record it to the subsidiary ledger, and we'll see that process. So then we're going to have a negative 7,500 as well. I'm just going to say negative of that number, and that's kind of like the plug formula. A shortened version of the plug formula just gives us what we need to be in balance. I need that times -1 if there's only 2 accounts. And that other account then will be accounts receivable, because we got it on account. We didn't earn it this time. We got paid for something we did in the past, and we're tracking the fact that people owed us money. That $16,330 is what people owe us. We have now been paid. It then needs to go down. This is a debit. The way to decrease it is to do the opposite thing to it, in this case a credit. So we're going to copy this account, scroll down, put that in cell G23, right click and paste it 1, 2, 3. We'll then go to the home tab. We'll go to the alignment group, and we will indent this information there. Then we'll go through and just post this out. This is called recording the journal entry, or journalizing the journal entry in the general journal, and then we'll go through the process of posting this to the general ledger over here, which will then be used to create the trial balance. So here's the undeposited funds. It's right there. It's right here on the trial balance, and will be in the same order on the general ledger. So we're going to scroll over here and look for that. Well, before we do that, hold on. I'm going to scroll up top. We're going to freeze the pane. So I'm going to put my cursor here on AJ1, go to the View tab, and then go to the Windows group, and then freeze the panes. By the way, the reason we do this every time instead of just always having the panes frozen is so that you don't just look at the worksheet and start maneuvering it around and it looks funny. So we want to be able to click that and say, this is why it's starting to look funny, meaning this is why when we scroll over this way, those first cells will remain. And then we're going to scroll down. We're going to look for that undeposited funds, which is right here in AU23. So within AU23, we're going to say that equals and just point to that 7,500. When we do so, the undeposited funds will increase to 12,500. Just going to scroll that back with the left arrow, scrolling back. If we scroll then up, we see the undeposited funds there as well, 12,500. We see we are out of balance here, and we need to record the other side, that to accounts receivable. Accounts receivable is going to be the second account here. It's going to be the second account on the general ledger as well. We want to record this right here in the accounts receivable. We're going to be in the credits side, so we are in cell AR12. AR12 equals, and then we're going to point to that 7,500. That will bring the 16,003 balance down to 8,830. If we scroll back over to the general ledger, we see that balance here, 8,830, and we see that we are in balance down here as well. Other thing we have to do, remember, that is we recorded this into the receivables. The receivables up here represents what is owed to us. We need to reduce that to not just to the general ledger account, recording the receivable by date of transaction, but also to the subsidiary account, recording who owes us this money. In essence, just recording the same information but in a different ordering, in this case in ordering by customer. So we're going to scroll back over. We're going to scroll back over all the way over till we get to the subsidiary ledger. We're going to see green items again at some point. So here are the green items. Here are our customers, and we have Jones here is the one who paid us. That's nice, because we're going to say that we have this credit, and we're going to say it's the same credit. This same thing is being recorded. It's just like we're posting it to the general ledger, and it's just like a different general ledger that's just in a different order. And we're going to say that that's the $7,500. So Jones no longer owes us that and is down to just owing us that $399 from that second invoice that we had input. And if we were to add up all those amounts then for the people that owe us money, the customers that owe us money, it comes out to $8,830. That then should also be found on the general ledger. I'm scrolling left to see that that is the case, that $8,830 is on the general ledger, as we hope it will be. There it is right there. 8,830 also found on the trial balance, 8,830. We are back in balance, I believe. We already checked that. Yes. No effect on net income with this transaction. Note, nothing in the sales, nothing in the expenses. And even though we got cash undeposited funds because we earned the revenue in the past and recorded it in the past in accordance with the revenue recognition principle. We're going to go ahead and unfreeze the panes now. So I'm going to go to the View tab, Windows, Freeze Panes, Unfreeze, and then just check out the financial statements. So we messed with this account. We made some changes to it. We fixed it. We didn't mess with it. We fixed it. And then we went here and we did something to that account. So if we were to generate the financial statements, I'm just scrolling right all the way to the right. We could then automate the financial statements, pretty much set up automatically here. There's the change to the undeposited, which again, probably should be included as part of cash, but just breaking that out so you can see the separate line items. It will be in cash once we deposit the funds. And then we've got the receivables here. We've got our total assets and our total liabilities and equity. No impact from this transaction on the income statement here. There's our net income, and here's our statement of equity. The ending balance here being the same as the balance there, and that's this information. Hello, in this presentation we will record another transaction for the receipt of payment for work done in the past into our bookkeeping problem in Excel, looking at the same type of transaction that could happen in accounting software such as QuickBooks. This is the third receipt payment transaction we have looked at. We will therefore go a little bit faster. If you want more detail, you can go to the prior receipt payment transactions and look at a little bit more detail and in-depth on. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below on them. If we looked at the QuickBooks first, and then we're going to move to Excel and input this information to Excel, we would have a receive payment. Remember, that means that we already issued the invoice. Now we are receiving payment from the customer for invoice received in the past. The data input into QuickBooks is relatively easy, meaning all we need to do is put the name of the customer. QuickBooks will then say, hey, we have an invoice out for that customer. Is this related to that invoice? We're going to say yes. And then put in the date and the type of payment. That's pretty much it. QuickBooks will reduce the accounts receivable, given that it is a customer payment, by the amount received. That's what a customer payment form does. And then the other side will go to an account we call undeposited funds, that being the thing that's a bit different from a QuickBooks transaction than what we often learn in theory. Let's record the same thing in Excel. Going to our Excel worksheet, we will record this transaction. If we think about an accounting theory problem, then in essence we have a problem that would say something like, we received payment on account. And that means that we got money, typically cash, but in this case we're going to put the cash not into the checking account, but into an undeposited funds account, which we will then deposit in the checking account in the grouping of the deposit at the end of hopefully each day. So we're going to increase the undeposited funds account, which is a cash type of account. It's got a debit balance. We're going to do the same thing to it, which in this case is another debit. So we're going to copy this. We're going to scroll back down. We're going to make a new journal entry in cell F25, the date 1/12, and we are going to right click, then paste that undeposited. It's going to look at the same as the other two journal entries up top. However, remember that we also need to record this receivable by subsidiary ledger. That's where this process will differ from the other two transactions. We have $8,000 in the debit to undeposited funds. We're going to credit something. I'm going to use our plug type formula. Instead of just typing a negative 8,000, you could type negative of that cell. Taking that cell, flipping the sign, in essence taking it and multiplying it times -1. Then we just need to know what that account will be. We're going to receive this payment because we did work in the past, meaning we're not going to credit revenue. We didn't do work at this point in time. We already did the work, invoiced the client, we're receiving payment on that. Therefore, we're going to reduce the receivable. Receivable has a debit balance in it. We're going to do the opposite thing to it to make it go down, which in this case is a credit. So we're going to copy that. Scroll down, we're going to, in the credit section, we're in G26, right-clicking in G26 and pasting 1, 2, 3. Then we're in the Home tab, we're in the Alignments group, we're going to increase the indentation, and there's our journal entry. We have journalized the journal entry in the General Journal, and now we'll go through the process of posting this journal entry to the General Ledger. So here's the unearned, undeposited funds in the journal entry. Here it is on the trial balance. Same order on the General Ledger. We're going to go ahead and freeze the panes before we go through this process by going to AJ1. Go to the Home tab. We want to go to the View. We want to go to the View tab and then go to the Windows group and freeze panes. We want to freeze the panes. Then we're going to find that undeposited funds. We're going to go to the right and find the undeposited funds. Scrolling down, there's the undeposited funds. We are in cell AU24. We're going to select equals in AU24 and point to this 8,000 in H25. That will increase the undeposited funds from 12,500 to 20,500. That 20,500 also being found, scrolling left, on the trial balance, 20,500 here on the trial balance. Then we're going to record the other side, the accounts receivable. There's the accounts receivable we want to record. Here it is on the trial balance. It is the second account and therefore will also be the second account on the General Ledger. Scrolling over to that second account, we see it here. We're going to go to the next available spot in AR13 and we want to make this AR13 equal to that 8,000 credit. Therefore, we will select equals, point to that 8,000 credit. That will bring the balance down from 8,830 down by 8,000 to 830. That same 830 then should still be found here in the receivable. Now you would think we're done, but we're not quite done because this receivable represents what is owed to us. And if we want to know more detail of that, we can say when did these transactions happen? By looking at the General Ledger, it gives us the transactions by detail. And however, we want to know by who owes us the money so we can try to collect on it, hopefully at some point. So to do that, we're going to record this same transaction, this same 8,000, this same 8,000 to another type of subsidiary ledger that's just in a different order, and it's going to be called the accounts receivable subsidiary ledger. We're going to scroll over to the right until we find that. So we're scrolling all the way to the right. We're going to see some green type accounts again, and that's when we know we are there. So way over here, here's our green type accounts. This is the accounts receivable subsidiary ledger by customer. We're looking at Smith Guitars. Here's Smith Guitars paid us that 8,000, so we will be in cell CS15, and that's going to be equal to this 8,000 here. So we're just posting this same 8,000 to another type of subsidiary ledger, not the general ledger, but a subsidiary ledger broken out not just by date, but also by customer. There we have that. And so the Smith Guitars owes us nothing at this time. If we add up all those accounts, then we total up to people owing us $830. Scrolling back over to our general ledger, we'll find that 830 in accounts receivable, most likely. There it is, 830. Hopefully we do, because that's, if we weren't to find it there, it would be wrong. And we also see it on the trial balance there, and those are our accounts. We'll scroll back down, see if we are back in balance. We're back in balance, meaning the debits minus the credits equals 0. No effect in net income of this transaction, even though we got cash, because we earned the revenue in the past when we did the work. In this case, prior to this problem, this 8,000 wasn't put in this problem. It was part of the beginning balances. So we earned it prior to when we started putting together our books or putting them formally into the QuickBooks or Excel process. Now we're going to find this on the financial statements. This will be used to create the financials. We did something to the receivables. We did something to the unearned revenue. Let's just take a look at how that just is automatically making the financials in a similar way as it is in accounting software. So we're going to scroll back over here, and we just have this automated process. There's the 830. There's the undeposited funds, which probably should be in the cash account, but we're just going to break that out for now so we can see it. And here's our total assets equaling our total liabilities and equity. No impact from this transaction on the income statement down here. And the income statement net income is also part of the statement of owner's equity. Statement of owner's equity ending balance $150,555, also found on the balance sheet right here. So that will be our process. Hello, in this presentation we're going to talk about the receipt of payment and then making a deposit into the bank for that payment. We talked about both of these individually in a prior presentation. Now we're going to do them both at the same time, looking at the process of the receipt of payment and the depositing of that payment afterwards and the effect on the financial statements in QuickBooks Pro 2018. If you've been working with us, we will be continuing on the Get Great Guitars problem here. If not, that's okay. We will be working on the receipt of payment and the deposit of payment. If you have access to the backup file up to this point in the problem, then you could restore that by going to File, Open or Restore, and restore the file. It would be good to make sure that we're on the same point, whether you're going through the entire problem or whether you start at that point, because there will be data we're going to enter here and there'll be data afterwards, and if we're on the same page, be probably a little bit easier. But if we're not working with the same set of data, then we can still get the concepts of the receipt of payment and the recording the deposit. Why do we need those two steps? What are those two steps? Let's see those two steps in sequence. I'm also going to have the open windows open over here, so I'm going to go to the View tab and select Open Windows so we can toggle back and forth through the open windows, the only open window at this time being the home page. If you don't have the home page open, that's going to be under Company and Home Page. Now we're working down here in the customer section because typically we're going to receive payment right here from the customer. So that's what we're going to do now. We're going to get the payment from the customer. Now that implies, of course, that in the past we must have had created a invoice. So we invoice the customer, now we're going to receive payment. If we were to receive payment at the same point in time as we issued the goods, in this case the guitar, so we're selling guitars, so if we sold the guitar and got payment at the same point in time, we probably wouldn't be using the receive payment. We would just have created a sales receipt at the beginning point. So when we use this receive payment, we're basically saying there's something happened in the past, an invoice, and that means that we did work in the past. A lot of service companies will be in this format, like a bookkeeper or a law service. They'll do work, send the invoice out, receive payment later in the mail. That's what we're doing here. So now we are at the point of receiving the payment within the mail. Now note, within our process here, within our track, that's not where we stop. We have another step to get to the bank. And again, if you're looking at the financial accounting in terms of just recording journal entries, probably not used to this middle step. This middle step's not something we typically have just in financial recording. We would typically think that if we got payment, we're going to increase cash, we're going to decrease the receivable. But we haven't really gotten to the bank, so there's a difference in the types of cash we have here. Here we have cash that is undeposited, and here we have deposited cash, basically our checking account. The two things we want to have happen here, we want to differentiate those two, and we want to make sure that once it gets into our checking account, it does so in a way that it's grouped so that our books will match the bank books, so that when we reconcile matching our books to the bank books, a huge internal control that I highly recommend everyone doing, it will be easier for us to do that. It'll be easier for us to match those up. So that's what we're going to do here. We're going to first put it into undeposited funds and reduce the receivable, and then deposit them, taking it out of undeposited funds and putting it into the bank in the grouping that we want to make it easiest for us to reconcile the bank accounts. So first we're going to click on the receive payment. So you're imagining we got a payment in the mail here. We got a payment in the mail, and it was from Anderson Guitars. So I'm going to say that's the customer that we have here. So here's Anderson Guitars. We could just type it in there though. I'm going to start typing Anderson Guitars and then tab, and I would get used to that tabbing through. And you don't have to select a payment option here. I mean, it's not a required, but we're going to select just as a reference here what the payment is going to be. And we're going to say it was a check. And we got a check in the mail from the invoice in the past. This was for, and note we could type in the amount would be a check, but we could also just check off the invoice down here. So this invoice, original amount due, we're going to say check it off. It's going to say we're going to enter that amount there. If you check that off here, and we're going to go, yep. And then it puts the payment up top, shows us the balance still due down to 0. Amount due applied down to 0. Note, however, obviously if we put less than the amount of the invoice, then we would still have a amount due down here from this transaction. We're going to have the date is going to be 01/28/21, and we got the payment type. Here's the invoice that we are referencing to. What's this going to do then? It's going to reduce the accounts receivable, reduce the amount that is owed by Anderson, and it's going to increase a cash account, but not our checking account yet. It's going to increase undeposited funds. So let's record this, take a look at that. We're going to say save and close. Let's now take a quick look at our main financial statements and see if we can see what that did. We're going to go to reports. We're going to go to company and financial, scrolling down to the balance sheet standard, changing the dates to, and actually I'm just going to go straight to the customized so I can change just the date range at one time. So customized report, we're going to go 01/01/21 to 12/31/21. And I want a range so that when we drill down on the data, we'll have a range within the transaction report. So I'm going to say OK. And what that does then, it only has one date on the balance sheet because it's as of a point in time. However, when we drill down on the data now, we'll have a range, a general ledger type, a transaction report by date that will have the date range. So if we look through this now, we're going to say that accounts receivable should be affected. So because we're going to reduce the amount owed by Anderson, double clicking on that, there's the receivable, and it has been decreased by that amount. If we double click on that, we get back to our form. So there's the customer payment, closing this back out, closing this back out. We also know that we would think it would affect cash increase, and that's what we would typically think in our normal journal entries. And it did kind of, but it put it into this undeposited funds. So now we've got this undeposited funds of 430, and we need to go ahead, if we double click on that, we can see that it's the 430 there. Double clicking on that, there is our customer payment. So I'm going to close that out. Those are the two accounts that are affected. We do not want this undeposited funds hanging around there after we deposit the funds. So we're going to have to make sure that we record that second piece of the transaction, that piece lowering or closing out undeposited funds and increasing the checking account. That being something that often gets missed by many people, and we ended up with this balance in undeposited funds and end up with trouble reconciling our bank accounts. So we want to make sure to take that second step. Note we also have the other report affected. If we go to reports up top, if we go to customers and receivables, we know that the aging report or the customer balance detail is also going to be affected. We'll see by customer that Anderson now has paid us right there, no longer owing us. So we should be able to match these out within our customer payments. And it looks like this is the case so far, bringing the balance back down to 0. If we double click on that, we get back to our customer payment. Let's close that out and close this out. We still have our open windows over here, going back to the home tab. And then we're going to do this one more time, one more customer. We will then go back to the receive payment. So remember, when we select receive payment, we are thinking that we got a payment for something that happened in the past. So you're imagining we got a check in the mail, and we're saying, and there's that check from that invoice we sent out in the past. And we're going to say receive payment so that we can lower the amount due to us from the person who wrote the check or the company who wrote the check. That in this case being Eric Music. So we're going to say Eric Music, and again, we could select the drop down and find them, or we can type in here. We should never have, by the way, a customer that is not in our list when we have a customer payment. It's never going to have a new customer that gave us a payment because we must have gotten a payment for something we delivered in the past. So unlike when we create an invoice or something like that, we might have a new customer. We might have to create a new customer field here. But in the case of a payment, we should always have the payment. So we shouldn't have that problem if you're in the receiving department where you got a payment where you see a payment for someone who doesn't exist in terms of a customer. We must have sent out an invoice to somebody, so we kind of should be able to tie that out in some way. So we're going to say tab, and it's going to be a check again, and there's what we want right there, that 525. So I'm going to click on that, check that off. We're going to say yes. And the date is going to be the 28th. That's what we're looking for. And the amount due, the amount applied, down to 0, the amount due. This is the original amount. This is the amount of payment. And so everything looks good. Everything checks out. So we're going to go ahead and say save and close, noting what we think should happen here. This should reduce accounts receivable for Eric Music no longer owing us money. And it should increase the cash account, the account of undeposited funds. So we're going to say save and close. See if that's the case by going to the balance sheet, still open in the open windows. There's the balance sheet. We're going to say that cash didn't go up. Accounts receivable went down though. If we double click on that, we see that we have this 525. Double clicking on that, we see that there's our customer payment. So closing that out, what's the other side of this transaction? What else is happening? The undeposited funds is also affected now at 955.50. Double clicking on that. We see the 525 at the bottom. Double clicking on that. We see that information once again. There's that. We're going to close this back out. Close this back out. This 955.50 is what now we need to move to the checking account when we deposit it. We're probably going to deposit it at one time because we're going to go to the bank at the end of the day and make all deposits at the end of the day, grouping the deposits at that point in time in the same format. They will be grouped on the bank statement, thereby making our bank reconciliation an easier process. So we're going to go back to the home tab and do that next step. That next step being the recording of deposits. When we look at the recording of deposits, it does indicate with this little red 2 that we have 2 outstanding deposits, meaning we have 2 items that we put into undeposited funds that need depositing. So if we double click on, or if we click on this one time, we don't need to double click on it, we'll click on it one time, and we get this pop-up item happening. Now, if there were nothing outstanding, we would just have this window, and it would not indicate that we'd have anything outstanding to deposit. We can enter a deposit directly into that window, but this window is showing us, hey, you've got a couple things that have been received payment from, and that you should have like in your desk drawer somewhere in your office there, somewhere in your establishment, that you need to go to the bank and deposit. And we're going to say that is true. We're going to check those both off. We're going to check those off. Those are the two received payments we've received in the mail, the 430.50 and the 525. Those are them, and we're going to say OK. And then it will autofill this deposit screen. We are going to the checking account. It should default to our main account, typically our checking account. And we're going to keep the same date. That's going to, because we're depositing these as of the end of the day. We got them in the mail. We're going to the bank at the end of the day, putting them into the bank. This is typically how it would be the last time we ran through the deposits. We broke the deposits out in accordance with a problem, trying to show the idea of depositing in different formats and also grouping the received payments as best we could for the problem. And this is more like we would see in practice, in that we would want an internal control of whenever we get a payment, we want to go to the bank and group those payments and deposit at the end of the day. That is, of course, a piece of the internal control system. One, to have those deposits in there at a similar time as they have been received so that the bank can track them and we can reconcile everything in time. And two, just not to have the deposits in the establishment any longer than they really have to, rather than have them within the bank. So this is the practice we would want to have. There's going to be those two deposits we're going to have here. Here's the total amount, that familiar $955.50. What is this transaction going to do when we save and close? It's going to deposit it into the bank. Checking account should be increasing by the amount of this deposit. The other side, being undeposited funds, should then go down to 0. So we're going to say save and close. See if that is the case by going back to the balance sheet, looking at the checking account, and we're going to double click on the checking account, see what is in there. And then this last item here is our deposit. Double clicking on the deposit, we see there it is. So the deposit has gone into the checking account. That is good. The other side of it should be in undeposited funds. Note that undeposited funds, however, has gone away. If we want to check the detail in undeposited funds, just to make sure that that is what is happening here, that's the other side of the transaction, we'd have to go somewhere else other than the financial statements. The financial statements not showing any accounts that have 0 balances. Couple ways we can do that. One, we could go to the banking and go to use register. And typically when we go to the use register, we're looking for the checking account. But in this case, we could go to any account. So QuickBooks allows us a register with any account. And if we go to the undeposited funds account, we can say OK, and we could see this activity. There's the activity bringing the undeposited funds to 0. If we were to double click right on this little DEP, then we would go to that screen where the deposit happened. So that's one way we can double check the detail and say, okay, yeah, it went down to 0 from that transaction. Other way you could take a look at it is, if this is easier or makes more sense to anybody, you can go to lists and you can go to chart of accounts. And there's our chart of accounts. So this is kind of like our trial balance here, but it's going to give us all of our accounts, not just those that has balances within them. And then we can go back to our undeposited funds. And I think if we just double click on it from here, it'll take us to that same register. And then we can see that amount again. And again, if we want to check the forms that created these, we can double click on those, and there they are. So that's going to be the process of both receiving payment and recording the payment, going back to the home tab, typically done in the same day. So if every day we get payments, we should basically be doing that. We receive payment, deposit the payment in accordance with the grouping that we have there. And then the crucial thing we want to do at the end of each month is to reconcile. This will help with our reconciling process, reconciling our books to the bank account, which is a huge check because the bank keeps pretty good records. And if we can say our records match the bank's records, then we have a pretty good idea over cash. If we have a pretty good idea over cash being affected in all of these cycles, vendor cycle, the payable cycle, or the purchases cycle, the customer cycle, or the accounts receivable or sales cycle, the employee cycle, or the wages payable cycle or payroll cycle, all of them are affected by cash. And therefore, if we're able to reconcile the bank account and say that our cash balance is good and double check it through an outside source, that's going to be a huge check, not only for cash, but for all of these cycles. So it's a big internal control. And we'll take a look at that at a later time.